Welcome to Bitcoin Escape Plan. Has this Bitcoin rally run out of steam, or are we just coiling up now for another rise higher? In today's video, we're going to go over the key levels that matter most in the short term. Later on in the video, we will tie that together with the higher time frame analysis so we understand the broader context of what's going on with the price. And at the very end of the video, I will go over these recent trade setups and just continuing ongoing coverage of how to make money with perpetuals trades on Bitcoin. If you are new to the channel, you can go check out bitcoinescapeplan.com every Monday. Yes, that's today. I release an in-depth newsletter that goes over all the key levels across timeframes that you can reference later in your email instead of here on YouTube, and a couple other goodies over there on the website. Go check it out, bitcoinescapeplan.com. Go subscribe. I also release YouTube videos every Sunday, Monday, Wednesday, and Friday. Let's get into the chart. 4-hour analysis. Bitcoin, what are we looking at? Uh-oh, it's already not working. We're off to a great start. Sometimes it does that. It just doesn't load your indicators. There we go. That's what we wanted. So in the immediate short term, we are pretty much just looking at the SMA and the Fibonacci pivots at the moment. The anchored VWAP levels we are currently too far away from to be getting clear information from them. And I don't know what's going on with my chart right now. It does not. Okay, no, it is referencing all of them. So what we're looking at primarily is we had a break below the 4-hour SMA. We have since hit the bottom Bollinger Band. Now, for anyone who understands the trading strategy I talk about all the time, technically that is a long. Again, I'll go over that at the end of the video. But that is what the chart is telling us at the moment, is that we have just had a significant long entry after getting a short entry on Friday. And we did talk about that in Friday's video already, so I don't need to get into that now. But basically, we're trying to see, is this 4-hour SMA starting to flatten out, and therefore is the price going to be pulled lower instead of higher, or do we still have a little bit of room to run in this progression here? So the key levels that I would be looking most clearly for besides the Fibonacci pivots, it looks like this guy right here, about 75.6K, pretty important on the 4-hour time frame. We hit it multiple times here when we initially broke the Bollinger Band. And then when we broke back down towards the SMA, it looks like we spent a lot of time around that. And it's where we're sitting literally as I'm recording this video as well. So that's going to be pretty crucial in the next 4-hour candle, which we still have 2 hours and 50 minutes roughly. Plenty of time for this to punch a little higher and get a break of the 4-hour SMA, though as you can see at the moment, it is not able to do so. It's just been a drop and trying to fight to get back up to that level. We have not seen enough bullish momentum to get out of that. And even these bullish candles here, not a ton of volume there. Pretty passive, like rise. Looks like a drop in early Sunday. But yeah, for the most part, not a crazy amount of volume. The volume looks like it was downside pressure then, which is pretty normal, you know. So we just saw a weekly close. That's part of why the price got pulled down like that. Again, we'll go over that in the higher time frame a little bit later on in the video because it's just easier to see there. But on the 4-hour analysis, that 4-hour SMA is currently at 75.9-ish roughly. Like I said, we just need to find strength at about 75.6K. If we can find strength here, start closing back above, it gives us room to move higher. The Bollinger Bands themselves are not really super compressed yet. Like over here, we knew that we were going to have a major either upside or downside move because we were seeing significant compression of the Bollinger Bands. We're not seeing that at the moment. They're still pretty wide, which means things really could go either way. It's also, they're literally consolidating at the moment. So the price is trying to decide, do we build support and resistance here, or are we about to just start heading back in this direction? I do believe that we are going to head back in that direction. But as I've been saying for multiple weeks on this channel, I'm anticipating it's closer to this point, about the 24th of April, potentially the end of April. There's some evidence that it could actually just be all throughout the month of April, depending on how much the futures contracts and other dated contracts are really determining the liquidity of the markets, which I think it's hard to like say with certainty, since there are so many different mediums and vehicles that you can gain exposure to Bitcoin now. It's not as simple as purely on-chain metrics would like it to seem. So before we move on to the higher timeframes, I will say this is the anchor VWAP. I believe you can go watch the courses up here if you don't know what the hell I'm talking about. But I believe that this is, so this should be the middle band of the Elder VWAP still. Yes, which puts this as the middle band of the downtrend. Essentially, same story for both of them. We've got about 80.2K and about 83.5K. I still expect that they're going to be resistance, personally. Like, that's what I think is going to happen. I don't even know that we get to 83.5. That is kind of the highest that I can believe for this rally at the moment. But that's what we'd be looking for, is a strong reaction off of either both of those or at least one of them. It kind of depends on how long we're going to see this pattern continue, where we break up, we break down significantly, we break back up significantly for a while, consolidate, then we break back down to a little bit above where the previous rally was. Similar here, we did break down a little bit more in this last instance than that, but you can still see forming as support slightly above these closing candles. So as long as we maintain that shape, which again looks like we just tested that pretty hard, then at the moment I am still bullish. I still believe that we're going to be at least till the end of April, which I know is not very long now, like 10 days or whatever, essentially, before I think we're going to see a flip back towards these trend lines. And it's not going to be very favorable if we break below that red trend line and cannot stay above that blue trend line, which again we'll probably know, I would think, by the beginning of May, but we'll start to see clear signs of that around April 23rd to April 25th, which I should have a video out, I guess, the 22nd and the 24th, according to how the week works. But yeah, just check out those videos on Wednesday and Friday for updates on this. But that is still baseline assumption, is that we're going to go in that direction in a moment. Why do I believe that? What's telling me that? Well, the higher time frames, if we take a look, this is super important. We've been talking about this forever, that we wanted to see a retest of this 67 or 76.2K Fibonacci pivot. I don't even know how many times I've said that in these videos. Pretty much literally since the first week of February, we've been talking about that. So it is exciting to see it happen now. More importantly, on the weekly time frame, we did just see a break, an ultimate failure in the weekly SMA. However, you know, and I did talk about this in Friday's video, that I anticipated that, like, that's not terrible. You know, this is still very good. That's not a terrible circumstance to be in. We were above both 70.3K and this guy right here, which is about 72.9K. That's really what we wanted to see, was support that held at least above that, and that is what we got. We got a close at 73.8K, which is enough, high enough, a grand higher than that, which, whatever, close enough to being formed as clear support, which is what we wanted to see for this candle. Now we're going to experience essentially the same thing this week. We're going to need to see the reaction to 76.2K, and it does look like the weekly SMA got pulled down even lower to 76.9, so they're basically touching each other. Basically, like I've said in every video since early February, we are expecting to see this form as resistance. It does not matter if the price is able to break above it. You know, there's some evidence that it could break above it for a period of up to 3 or 4 weeks, which for our case would just be this rally would continue into May instead of selling off right at the beginning of May. It's been pretty normal recently that we've had like major sell-offs. Like this sell-off happened like literally the last week of January. We pretty much, the bottom I think is like right before February. When is it? This is March, so it's like same thing. End of March is like basically the end of this trend, and then we flip in the opposite direction. This guy here, February 5th, so a little bit closer into the end of February. But so it's not always like literally exactly the end of the week or exactly the end of the month, but it is pretty normal for us to see towards the end of the week, at least for the last like month or two. I've noticed this, where there's a lot of volatility on the Sunday before a key weekly close that's related. Like I guarantee you that this one in March was very similar, where there was just like a lot of like dramatic activity right before the candle closed. And I think that's happened 2 weeks in a row now. Pretty sure, where like within the last like 2 hours of the day on Sunday, there was like dramatic volatility that ended up changing basically like any analysis that you would have had before. It would flip it. Other than like, I mean, you guys know because you follow me on this channel, I talk about the same stuff all the time. You know, like I'm pretty much always talking about the same levels. I've been talking about this interaction with the weekly SMA since the weekly SMA was back up here, you know, like all the way up here. That's when I was still thinking that 96K was possible. I do not believe that 96K is possible in the year 2026. I don't think it's going to happen. I think that 97.9K on Monday, January 2026, or whatever exact day it was, that's the weekly candle. Whatever day that was in January, I think that that's the highest price that we're going to see all of 2026, barring only if they are able to get enough volume with the stable coins early on to dictate a massive rise in liquidity. However, as far as I understand, based on the law, I think that that's 2027, January, where we actually start to see that money really flow in and force. And it doesn't happen all on day one. You know, that's not how liquidity works. Like it takes time. You know, these things are, it's like seeing a tidal wave. Like you're going to see it before it hits the shore. You're going to be aware, oh, okay, we should probably move in accordance with this force of nature. That's what's been happening, you know. When we had a strong reaction off of 64 after a retest, a break and retest, we knew that we were going to go higher towards 76.2K. Again, we've been talking about this in every video since February. So it's not strange to us that this interaction occurred. What we need to pay close attention to is where this candle closes. You know, this one was important. We did actually want this one to be closer to 76.2K. I wouldn't regard that as a failure at all. I would regard that as manipulation. You know, like that's people really not wanting this to close as a favorable weekly SMA interaction. We wanted it to be theoretically viewed as a failure of the weekly SMA. This one is the one that is actually going to count as a failure if we're not able to close above it this week. Oh my God, I need water. If we're not able to close above it this week, then we're going to be in real trouble. Give me 1 second. Oh my God, I need to keep water by the table. If we're not able to like have a strong interaction this week, breaking above it and closing above it, and again, like I said, 3 to 4 weeks is the most that we can expect, basically, where it's actually going to stay above it. And where's my evidence for that? Let's go take a look. So 2022 is over here. This is the interaction that I'm talking about. Where is it? Right at the end of March. The only difference between this cycle and 2018 is tracking more clearly to where we are, and 2022 seems like it was slightly pulled forward earlier, at least for the interactions with the weekly SMA. So that's the interaction that I'm looking at as a possibility. However, the difference being our interaction that we just had, our weekly SMA is still above this Fibonacci pivot. It's not below it. So in this particular instance, the weekly SMA was low enough by the time that we actually had an interaction with it, where a favorable interaction with the weekly SMA was not enough for a favorable interaction with that Fibonacci pivot and regarded as resistance, and then we then headed to the downside. Now, we don't have Fibonacci pivots for 2018. However, pretty similar. You can imagine the Fibonacci pivot's probably around here, probably around here, probably around here. And this is the same interaction, basically. This one is literally into the end of April, which is a big reason why I was able to predict this in the first place. Who was president during this time? Everybody in the audience, Donald J. Trump. So not that strange that it's retracing. Most of it's very similar, guys. Hate to break it to you. But that's another failure, essentially. And again, I would imagine that Fibonacci pivot is probably around here. I don't know exactly where it is, and that would kind of change the meaning of this analysis, because that in this particular case, say it was right here, that means that we would have formed slight support the same way that in 2022 we formed slight support off of the SMA itself, and then it was still regarded a failure on the other one. And that's basically what we're waiting to see confirmation of now, is do we have, oh my God, so far. Is this going to be regarded as a significant failure, or is the price able to close above 76.2K and above now 76.9K, being, again, that's the weekly SMA. So again, our best case scenario is that we would chop above it and stay above it briefly. In that other instance where that happened, this weekly SMA was already below this Fibonacci pivot. However, if we're able to get a favorable interaction above it, then what that is going to do is temporarily this Fibonacci pivot is going to be regarded as support. Again, if we have a significant failure here on the weekly, if we're not able to close this week above 76.9K, and I would imagine that will still get pulled down for the rest of the week. Like by the time I do like Sunday's video next week or even Friday's video this week, probably these two will be touching, I would imagine, or very close to touching, because it did drop pretty significantly last week. Our best case scenario, again, is that we're going to get up to 3 weeks where we are above just this guy. It's whatever the topmost interaction is. It's not like it's going to be 3 weeks above that Fibonacci pivot necessarily. It could be theoretically, but I don't think so. I think whenever we actually get a close at or above the weekly SMA, the clock is ticking. Like there's not very much time before we're going to need to see how does it react to 80K, and more likely, does it need to retest 76.2K on the downside? Which again, seeing that manipulation right towards the end of the candle there, that is kind of, is telling me that we're going to see that again. You know, for that to happen so significantly, for us to lose that much of the wick, literally, I believe in like the second half of Sunday, pretty much. Like it's not like that took the whole week. Like that was just the weekend essentially that took place after a significant rise to the upside. So it really just kind of depends. Again, not a ton of volume to start off April so far. Not really. Not compared to March has more significant volume. February has more significant volume. So it really just kind of depends. I talk about this all the time as well. This is the anchored volume profile. There's just not that many human beings between about 72K and about 86K that there's like that people are actually holding at those levels, that they bought at those levels. You know, that means that there's nobody on the other end of the keyboard that has an opinion about these levels. You know, we need people to have strong opinions. People feel very strongly about 67K. You know, they feel very strongly about this region here, about 86 to about 96, 98. There's enough people that have opinions, strong or otherwise, that will have to make decisions based on their feelings or ability to ignore their feelings as the price rises into those levels. And again, we haven't really seen this step up. We've seen it step up a little bit. Like this is a little bit thicker than it was, say like 2 weeks ago worth of videos. You'd have to go and check. I don't actively go back and track that. But it's the same shape essentially, where this is pretty thin compared to this level, and then obviously considerably lower. That's still where our point of control is all the way down at 27. So me personally, just to kind of like wrap this into like the broader narrative of what's going on with the charts, I don't think that the market cycle is over until all of these people over here in 2024 are in some version of pain. It doesn't have to be significant pain. They don't have to be in like 50 or 70% drawdown, you know, but we do need to see price actually break and retest. I would say right about there, about 55K. We haven't seen it yet. We've only seen 59. What is it? 59.9. I don't know, which to me is it's just not reasonable, you know, for us to get like a 52% drop in the middle of a bear market and that's it. Like that, we don't get any lower, you know. Like the last one was about 78%. The one before that was like 84, 86%. The one before that was like 93, like 94%. So it would just be very strange with the trend before the actual liquidity has entered the market. I'm fully prepared to like change my opinion on how the math functions post stablecoins entering the market en masse, because it is a supply and demand asset, and there is going to be a point where this chart is just up and to the right, period. Where it's hard for us to distinguish between a local bottom at $280,000, like it's going to be hard for anyone who's been subscribed to this channel or watching my content for a long period of time. You're not going to care, even if your cost basis is $75,700 per Bitcoin, you're not going to care about the theoretical future bottom at 280. It's not going to matter to you, So we really have to keep that in context, that until that significant liquidity has entered the market, we have to assume that it's going to behave the same way that it always does, which means what we would expect is a failure of this weekly SMA that ultimately will result in another failure, another lower high. In this particular case in 2022, we did not see that for July. We actually saw, we saw a slight rally into July that just got regarded as another weekly failure of the SMA. It's a little bit different for 2018, but pretty much same story. We had a lower high form in April. We had a lower high form in July. Both of them were regarded as failures of the weekly SMA. And same thing with this guy. This is 2 weeks that we spend above it, and then obviously it closed below it on the second week. I don't see any evidence of it being more weeks other than this guy here, but that's not the year that we are in. Like this is a halving year, so we really shouldn't expect the price to behave the same way in a halving year as a bear market year. Like there's no reason. That's not how logic functions. And then same thing, this is our last halving year. It was a significant rise from the ETFs being launched, coupled with the halving excitement of like new buyers investing based upon whatever narrative they can cling on to. And it's very soon, probably not till 2030, maybe 2034, where the halving narrative is not going to matter at all. The amount of Bitcoin that's going to be rewarded is going to be so marginal compared to the demand of the Bitcoin, both because of the Bitcoin treasury companies as well as governments. Governments are going to be buying it up as well, or seizing it. They're going to be seizing it from people that they deem are criminals. That's what the US is already doing. Shout out to the Strategic Bitcoin Reserve that still doesn't exist, even though they announced it 2 years ago, whatever. Anyway, so that's what we're expecting, is a failure of the weekly SMA. All right, I'm going to get into the trades. I'm silly today. I don't know what's going on. I'm not super focused. Merry Christmas. Let's get into it. All right. So like I said, Friday, we had a clear short from there. I did not close my position. I'm still chilling in my position. Pretty happy with it. Anyone, again, who's been following the channel, you already know I was in loss for the last like 3.5 weeks because I'm a dummy. I took the correct trade. I took a short and then flipped it because I thought what is happening now was happening then. Very silly of me. Doesn't make any sense. But if I were to redo this again, with really, it comes down to having more cash in your position. I don't have a ton of cash in the account. I have like $1,000 in the account because I want to learn how to do this properly before I blow like a ton of money on it. And what I would do if I had, significantly more margin is basically, I believe with the perpetual trades, you want to be exposed to the trend. That's what it's for, is maintaining leverage exposure to whatever the trend is. So you do not want to sell all of your positions here that you had been long from over here or earlier. You don't want to get out of all those longs, or even if you were able to get the 59.9K earlier in February, if you were able to long from there, you wouldn't want to close that. You would want to be directionally long for that entire time period, and you would want to just add to that position if you have the cash anytime we see a break to the bottom side of the Bollinger Band. So what have we just seen? Well, this is earlier. This is last week, I guess. So on Sunday, we see another interaction with a 4-hour that regarded as a bullish upside momentum. We just saw the same thing. Even though it doesn't really seem like it, we just saw the same thing on Sunday, which again, that would indicate to us that we're going to temporarily go higher. Same thing, like I said, we are going to want to pay attention to, are we able to actually break above the 4-hour SMA now, this hour? Again, we have 2.5 hours before we are able to do that, or rather before we would get definitive information about the close for that. I mean, that can can push to that in 10 minutes, like it can happen very quickly if liquidity returns to the market. But at the moment, not a ton of volume. Certainly not compared to other times of April. And this might have just been because it was right before taxes. People were getting excited. But yeah, we had a lot last Friday. And then nothing now. Pretty flat since then at the moment. So there's nothing really like psychologically super important at the levels that we're at now. We already passed those levels, 73.8K and 69K. We're already above those. Who's already at the moment form those as support. Well, actually, I guess that's what we just tested. That is exactly what we just tested. I stand corrected. I talk about 73.8K in literally every video. You can check me on that in the comments. Like, always talk about that. So pretty normal for it to come back and check that. And I mean, that's pretty clear that it checked it as support. You know, like that's a pretty obvious close right there as support. A decent red candle to the downside, two of them, that immediately got eaten up. You know, like people want 73.8K to be support at the moment so that we can see how high we can go. So again, directionally for me at the moment, I am bullish until proven otherwise. You know, I've said a million times where I believe that can top out, which I believe is somewhere between 80 and 83.5K. And then at that time, I'm probably going to flip bearish on my perpetuals. This is not investing advice. I'm not positive if that's going to be the case. I'll be looking for something like this. I mean, quite frankly, I think that I'm going to switch to scalping after this. There is an argument. I think I'm going to manage a combination of the futures as well as the perpetual trades. But it would be my gut inclination at that time, if we expect price to behave how it has in the past, that we're going to see a failure of the weekly SMA. We're not even going to get back to the monthly SMA. The monthly SMA is all the way up at like 90 something, 90.7K. I don't think we're going to touch that. I will say, because the anchor VWAPs rewrote themselves way higher, there is some tomfoolery happening that may give some credence to the chart actually being more similar to this guy over here, which just means it's happening early. Like we may see a significant rise into 2019, that being into 2027. And it just kind of depends on if we're seeing the majority of the volatility happen over the course of 1 year, or if it's kind of interspersed each year. And I think it's hard to say at the moment. We got a lot last year at the end relative to where we would normally get it. But again, my just general theory is that these people, the ETF buyers, need to experience pain before this market cycle is actually over. And until that point in time, it's just going to be choppy. But I think that a failure, again, this is the monthly, but a failure of the weekly SMA is going to be enough pressure to get us back down towards 64K. And in this particular case, this is the bottom band of the downtrend anchored VWAP. And if we fail that, which is currently at about 67.9K, it's not going to be good. Not going to be good for the price. And again, I am anticipating that's going to happen pretty soon. Like I would say into the beginning of May. I mean, I've been saying the 24th of April just because that's like the midpoint essentially of where these trend lines cross. Technically, I should redraw this one a little bit, but it's not going to change it that much. And this guy, we've already broken this one, so technically have to redraw that as well, but I'm hesitant to do that until we actually get some resolution here. I'm just like I'm not really convinced that it's just going to continue up this way indefinitely. It is possible. And again, we would just need to redraw this trend line to where we are currently based on continued interactions. But again, I think it's the weekly SMA that's actually going to tell us. That's what's going to be most clear. Is if we fail that multiple times, price is going to get pushed down, dude. I'm sorry. But in this time, in this season, like it's very sensitive. Anytime we even get close to the weekly SMA and fail it, it's very sensitive to that. You know, like it's not something that's going to be ignored. Very sensitive. Failure. Like failure. Like that is the trend with the weekly SMA during this part of the cycle is we break it. We try to get back to it. We fail it. We try to get back to it. We fail it. We try to get back to it. We fail it. That's just what happens. It's very normal during bear markets. I believe it's the same for 2014 as well. Yes, it is. So back then we stayed above it for longer time periods, but it's pretty much the same thing. Just start breaking and breaking and breaking. Break above it, fail. And now it's finally time for a rise. When? Not this year, but the pre-halving year. Or in this particular instance, yeah, I believe 2016 was yes, that's how math works. 2016 was the halving. So same story, guys, same story. Until the stablecoin liquidity actually comes in mass, then I'll be singing a different tune because quite frankly, companies like JP Morgan Chase that are custodying like $4 trillion, $5 trillion or whatever, all that they have to do is convince their customers to put 10% of their money in stable coins, not in Bitcoin. That's the narrative that everybody fucking talks about, is what the price of Bitcoin is going to be if asset managers tell people to put 1% of their portfolio or 5% of their portfolio. Like Cathie Woods made an entire fucking career off this, of convincing you that the price of Bitcoin is going to go to $1 million by a certain date. She doesn't know what date it's going to go to. It's going to go to that just based on math, because that's how math works. They're not making any more Bitcoin. They're only releasing a little bit at a time. It's going to continue to go up in value. That's the point. That's what it's designed to do long term, is to hold its value. So me personally, until that money actually enters the market, we're not going to see a massive dramatic change. And it might actually be easier to see this on the gold chart. What caused this massive rise for gold? Well, it's very simple. When all of the banks were failing in 2022, Silvergate, all those other banks, that started to cause significant lack of faith. This is also war in Ukraine. All of that is happening. More and more instability means that we want to go to the safest asset, which in this case is gold. And I already went over this in Friday's video, so I won't go over it too much. But I do believe that they're going to reprice the gold reserves at some point between now and say 2033, 2032, which means they're going to continue to rise the price as much as they can during that time and then crash it hard as fuck. They're going to do the same shit with Bitcoin, in my opinion. I just don't think that it's going to be until probably I would assume the 2030s is when we're actually really going to see that, which I know. You're watching this on a Monday morning in 2026, and you're like, what the fuck are you talking about, Jacob? I'm not going to remember that, And neither will I. I'll be talking about it still, but, essentially, until those stablecoins actually enter the market, we do not have, just endless amounts of volume that are going to flow into the market. People talk about MicroStrategy. They talk about, the other DATs. With the amount of money that they're buying, which is sometimes, in fairness, to the tune of hundreds of millions of dollars weekly, that is not enough money to significantly move an asset class that is, between $1 and $2 trillion. There needs to be more money from that, from way more than just one company, in order for it to significantly move it. And that's separating from the fact that we want this to be in the hands of people. We want it to be people. And as far as I understand, it's still about 60 or 64% of all Bitcoin is held by individual holders, which is good. We want that to be higher, honestly. That makes it safer, for the price to continue to rise instead of just getting manipulated. But there's so many different ways that they can manipulate the price now, that you're better off learning how to beat them instead of join them, or join them instead of beat them. You're better off learning how to trade it, is the point. This video is crazy today. We should have known. On this day? Come on. Anyways, so me personally, nothing wrong with that short trade. Do I stay in that for a long period of time? No, I do not. Because I'm directionally long still. So that's a scalp. When I talk about this strategy all the time, this video is a circus. The 4-hour breaks of the top band and the bottom band, those are our gold star entries. That's what we're looking for significant entries to trades. What we're looking for to close it is an interaction with the Fibonacci pivot or the SMA. Sometimes you can set arbitrary points like a 1 or 2% swing. Because I got to be honest, just to go over the math of this, I'm going to end this video, I think, because I'm going crazy. The math of this, if you have $1,000 at 10x leverage that you are trading, when the price moves 1%, you are going to make $100. So in this particular instance, how much did the price move? The price at the full move moved 5%, which means you would have made 50% of your money, which means you would have made $500 for risking $1,000 for a grand total of 2.5 days. That is wonderful. You do not need to chase after a million different meme coins and stuff like that if you can reliably do that with Bitcoin every couple days. That's the point of the strategy. That's why I only talk about Bitcoin, my friends, is because there's so many opportunities just trading these perpetuals and futures contracts that you do not need to you don't need to be spending most of your time risking it on other stuff. You should just be dollar cost averaging into Bitcoin at every price that you can afford it, not financial advice, and using a defined amount of cash that you have in an account that has access to perpetuals or futures trading, just to steadily grow that account. That's my main focus, is the more that I'm able to put my excess cash into that trading account, the more that I'm going to be rewarded by these trade setups. So that same trade setup, that 5% move, even again, if you only wanted to take 1 or 2% in that, at $1,000, that's $100, $200, $300, $500. At $5,000, that is $500 on the 1% swing, $1,000 on the 2% swing, $2,000 on a 4% swing. You're gonna end up making a significant amount of money the more money that you actually have in the trade setup. And $5,000 is not that much money when you really think about it. $5,000 making $500 every time it swings by 1%. There's not that many jobs for the average human being who is not already well established in a career that are gonna beat being able to make $500 3 times a week, just by paying attention to when the Bollinger Bands break. There's other strategies, obviously, that over time, I'm going to continue to refine this strategy and make it more detailed. One of the things I really want to check out, actually, if you're still listening to this video, 1, you're a saint. 2, if you use the Bollinger Band width indicator, talk to me about it, because I'm very curious about that one, if it's able to give more clear analysis, essentially, of where the actual outside of the band is. Because I think that's going to really clean up exactly when to enter. Exits are still going to be roughly the same. Again, the reason why I gave that math example is you obviously, in a best case scenario, you're just going to ride it all the way till there. But I got to be honest, if you're trading $10,000, and you just want to make your money for the week, and then you want to go hang out with your family or do whatever, at a 1% move, you just made $1,000. At a 2% move, you just made $2,000. It's not unreasonable at that time for you to have sold half of your position and then just kind of let the rust ride for a bit and see. And that, again, I really think it's mostly about managing the position more than it is having to close it all the time. That's the only reason I was able to remain in profit during this time. Or actually, I shouldn't say it that way. I was in loss for 3 weeks, my friends, 3 weeks, and had to not panic and understand, okay, you know what? The only thing that I actually have available to me right now is I can buy more at key levels. And I did. I got my cost basis down from whatever it was, 74, down to 72, which is not perfect, but it puts me in a position to now be in profit after being in loss. And that's cost me, I think, $1.50 in fees total, nothing. Very, very little to go from being $220 in loss to, I think it's still a little down right now, but I'm probably still up by $160, $180 or something like that. And I would imagine, again, I'm trying to close it closer to 80 or 83. I really go back and forth between if it's better. I think in a perfect world where you have a lot of cash, say you got 10 grand worth of cash, realistically, you're going to be able to trade about 3.5 grand at 10x leverage, which means, maybe 1 or 2 grand of that you're riding in perpetuals that are just exposure to trend, and that's it. You don't really care about the intraday swings. You just care about, okay, well, I believe that we're going to be bullish, therefore I want bullish exposure. And then the rest you would scalp, but where you're looking for these little swings. Because I got to be honest, it's a pretty nice life. If you just have, you got your 10 grand and you're looking for 1% swings, like to be able to just walk away making a grand or two every couple days just by risking $10,000 worth of capital. Again, like for my dividend bros in the comments, like if you were to make $1,000 a month, you would need to have like $1 million worth of stock in order to do that, as opposed to risking $10,000 in order to make $1,000 off of a 1% swing. Bitcoin does 1% almost every day of the year, pretty much every day of the year. It's going to do a total of a 1% move during the day. You know, like it might resolve as less than that in a candle, but in each one of these candles, that's still the price moved by about 1%. And like, you shouldn't be taking scalp trades on Saturdays. Like basically, if there's anything you should learn from watching these videos, do not take scalp trades on Saturdays unless it's like really clear on the chart. But typically the volume is not significant enough where it's worthwhile. Whereas in all of these, there's multiple opportunities for trades. Like there's multiple opportunities for you to enter or exit. That's an entry, that's an entry, that's an entry. Is that a perfect entry? No, but that's how you scale into these. You don't buy 10 contracts all at once. You buy 2 contracts, 4 contracts, 4 more contracts, whatever, you know. Like there's nothing wrong with kind of scaling into the trades and scaling out of the trades. And then you just kind of have to decide again, what is your time frame for these trades? And I think that there's an argument for having both. And I'll wrap the video up with this example. If we see what I think we're going to see, and I don't know if this is going to be the case, but this is my baseline hypothesis. If I'm wrong, I am wrong. If we see what we expect to see, which is a failure of the weekly SMA, that then breaks us back towards 64. Maybe we form 64 as support. Maybe we have to break it and then reclaim it again. What we would expect for a July lower high would probably be the same thing, a failure of 76.2K, if even. It might not even get that high. It might be 64K that we're retracing, depending on how violently we react to the weekly SMA now. If that continues, and that's the case, and I've talked about it all the time on this channel, the lowest I believe that the price can go is about 34 to 39K, somewhere in there. I don't know that it's going to, but like if we were talking about it and I like had to give you where I believed that it could go to, that's the lowest I could believe that it went to. For context, I thought that the lowest that it could go in 2022 was 10 to 12K. That's what I thought was like the lowest that I could believe. I did have 16K written down as like the next reasonable range, like 14 to 16, but I was of the opinion that 10 to 12 was where it could actually go. So it's probably the same thing here, where 34 to 39 is the lowest I could actually believe, which means it's probably 44 to 50 is where it will actually break out to, which again means that all of these ETF buyers do experience some pain. Not a lot of pain. It's going to be like a month of pain. Oh, woe is me, you little pensioners paying your IBIT fees. You know, like those people are not going to experience as much pain as people who bought here, you know, like, or God forbid, people who bought at the actual top. If you buy at the actual top of the market, you got to wait about 5 years before you're in profit. Sorry, it's just how it works. Should have read the rules before you got on the merry-go-round. So that's what we're waiting for at the moment. A reaction to the weekly SMA to tell us whether we have some room to run or whether we are going to react negatively. Me personally with my trades, that's what I'm focused on at the moment. I am long until proven otherwise by an interaction with the weekly SMA. At that time, I will likely flip my perpetuals to shorts. And I'm just kind of going to need to decide how much of my money in the account do I want to be exposed to the trend versus being exposed to scalping in general. Because I do think, you know, I talk about this with people all the time, like I don't like the other time frames other than the 15. The 15 is the only other one where I think that there is potential, where the signals look higher value to me, but it's significantly less for the probability. Like you're not gonna get a guaranteed 1% swing every time. It's from what I've like gathered from this chart, it's way more consistent that the probability is about a 0.2 to 0.5% move from an interaction with the Bollinger Band. But again, in a lot of these cases, that's quick. you're talking about you have an hour and a half to do that to possibly catch a 5% or 0.5% swing. It really does not make sense until you have a significant amount of capital, which I believe, like I said, if you have $1,000 worth of capital and 1% is $100, then you'd be making $50 in that particular instance, but having to risk $1,000 to do it, which I don't think is a great deal. I really think you need to have, technically the risk reward remains the same if you have more money, but I just think if you're going to be taking those scalps and you're treating it as income essentially, then I would want to have more money in the account. Like if you have $10,000 in the account, 1% swing is $1,000, which means a 0.5% swing is $500. Now, $500 is not that much for risking $10,000, but if you're pretty confident with your strategy, you're going to be in that trade for an hour and a half. You're going to be in that trade for an hour and a half. You're going to walk away with $500. You're going to put away some of it for taxes, leave the rest in your account, and now you have more safety for the next time you want to do it. But that's the only other time frame that I like, to be honest. Like the 1 hour, I don't think is quite as clean. Still some decent entries. Sometimes I like to check the 1 hour to confirm the 4 hours. But for example, all of these, those are all longs technically. And that one you would have got paid, but that one you wouldn't have, or barely. Nope. Technically yes, but you would have to wait for a long time, Like I don't think it's as clear, whereas over on the 4 hour, it's fucking clear as day, dude. Like really clear. Obvious long, obvious short that you were early on, but that's okay. Still obvious, Didn't quite get it. Like this one, you would have had to just understand that we're getting compression. Obvious short. Now, is it the craziest short? No, it's not. It's 1.5%. But still, that's 11% on your money when you're trading with 10x leverage. Like it doesn't take a ton for a 1% swing to be very impactful when you're trading with 10x leverage. It's just dependent upon the amount of capital that you have behind it. So if you have any questions about that, you can let me know in the comments. I have rambled so long in this video. If you're still subscribed, you're a saint. I'll talk to you on Monday. I haven't written the newsletter yet. I'm going to do that right after this. So you'll get that later today in your email. Oh, would you look at that? We're getting an interaction with the 4 hour, like I talked about it. That's why I talk about this for so long, because sometimes we get an interaction while I'm making the video. So that's what I've been paying attention to. So do we get a close above the 4 hour? Cool. That gives us a little bit of room to head back towards 76.2K. We are really going to want to pay attention to 76.2K to see if we get a favorable interaction or a negative interaction. That'll tell us everything that we need to know about the rest of the week. Oh my God, I need more water. All right, have a wonderful day.